The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 15th magnificent Monday edition of today's Money Masters show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a great weekend and is off to a great start of their day. Let's make sure that you and I, that we do everything in our power to have a magical Monday. And one thing we should always remember is that we are not creatures of circumstance, but instead we are creators of our own circumstances. And during the next hour, well, we'll go look at patterns in the markets. We'll look for patterns of circumstance, such as the A to B equals CD pattern. We'll take a look at Fibonacci expansion and retracement. We'll take a look at Japanese candlesticks. Those are the messages that the bulls and bears leave for you and I each and every day. We'll take a look at the Rhodes momentum trading strategy out here. We'll take a look at anything we can. Of course, this is an interactive show. That means we'd love to hear from you. You do that by picking up that phone and dialing 877-927-6648. That way you and I, we can go hunting for bulls and bears in the marketplace out there internationally. You can also call us at 727-445-1044. This is magnificent, magical Monday. Of course, it's TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got the Dow trading off about 4 points, S&P down by 3, NASDAQ Composite showing weakness, as well as the Russell 2000. NASDAQ off 33 points, Russell down 10. The DAX is flat. The FTSE is off 6 points out there. We've got gold up $2. Silver is flat, down 3 cents out here. Platinum is flat for a change. Light sweet crude also flat. The commodity sector getting flat out here. Trading out light sweet crude trade out at 92.29 out here. Lead the charge to the upside this morning. You've got the Lear Inc. up $5, or Rewalk Robotics, which is an IPO from Friday. That's up 40%, up $11 out there. Molson Coors Brewing up a nice 6%. Avenir Pharmaceuticals up 63%. That's up $4. Anheuser-Busch up 3%, up $3.50. SoftBank up 3%, up $2.60 out there. United Therapeutics up $2. Tesla to the downside, trading off 13%. Priceline down $9.50. LinkedIn off $8. Netflix off 8. Chipotle down 7. Google off 6. Amazon down 5. Jazz Pharmaceuticals off 4. Buffalo Wild Wings down 3. Looks like a bit of money maybe being made room for the Alibaba IPO, because it's just primarily NASDAQ stocks that are trading here to the downside. Nonetheless, we'll take a look at everything that you'd like. Let's start off by taking a look at what's going on inside of the NASDAQ Composite. In fact, let me go try to do this out here. Let me switch over to this spot right here. Now, give me a moment here to try to pull this up. So let me do this. Let me get a new chart going here. And what we're going to try to do here right now, do it live. I haven't done it. I'm using a new tool that I've been developing with a really great group of e-signal programmers out here. And this is Stevie's version of the primary trading range boundary lines out here. So I'm going to start with the NASDAQ Composite, since that is the weak link out here in the market. Let's go ahead, and this is going to automatically go ahead and populate this screen. And it's going to go ahead initially here and put in the weekly market profiles for me. And I'm going to clean this screen up as well and get rid of some of the noise that is on here. So give me a moment to do that. Let's take off this. Let's take off these moving averages. Let's take off this. Let's take off that. Let's get rid of that. Okay, so we're going to take a look. This is a weekly chart that we're looking at for the NASDAQ Composite out here. And if you're watching this on Tiger, it's got the daily. So let me put the actual weekly. Give me a moment here to actually put the correct primary trading range boundary lines. Now, these primary trading range boundary lines out here, these are natural areas of support and resistance out here. And if you're watching this on Tiger TV, and I hope that you are, if you listen on your radio, your mobile device at tfnn.mobi. Thanks so much for doing that. As I pull this stock chart back here, I've got data going back into the 1995 time frame in order to identify the primary trading range boundary line. So it doesn't automatically out there. We don't have to go figure out where we see the largest number of co-located opens and closes out here. This little dashed line, this large dash line right around the 2269, if you take a look at the chart going back in the 1995 time frame, what you're going to see is that is the largest number of co-located. That means it could be an open or a close out there. That is where you've got the largest congestion area. The second largest area looks to me like it's right down here at about the 1850 level. So the primary trading ranges were set up many, many years ago, and they just simply carry forward out here. The solid lines, what they represent, those solid levels of as ice, as resistance and or support. And what we can see here as we take a look at this is the weekly chart now that we're looking at for the NASDAQ composite. What we can see up overhead for the NASDAQ on a weekly chart, let me pull this back just a bit, right in about the price level of 4637 or so. So we'll just simply call it 4600. That becomes a very significant area of resistance for the NASDAQ to be able to get through. And a close above that, and chances are, price will move up to the next level. That's above the 5,000 area. We're not there yet. If we take a look at any kind of a pullback inside of the marketplace out here, I'm going to go ahead and expand this up just a bit, move this down. There we go. Makes it a little bit easier to see out here. The next level of really support is that midpoint right around 4450. Any break of that area and what we should see inside the NASDAQ is moved down to 4242. Now that is a weekly chart. What I can also do out here is I can also, the interesting thing, since we are using co-located opens and closes. We're using the body of the candle, right? The body of the candle is truly the essence of price out here. So on a weekly chart, what I can actually do is I can actually turn on, and this was done with the click of a few buttons out here. What I can also do is I can go ahead and I can turn on the monthly PTRs to see where those happen to reside inside of this chart. Because if we're using candles, if we're using bodies of candles, this is where I differentiate my system with the system that Bud Rolfs had created. Bud was using consistent, whatever showed up as a monthly line out there, that emulated the weekly and the daily. But in my case here, where I've got the automated tool, where I can just truly take a look at the body of the candle, this really helps us to understand different levels on different time frames, where the levels of support and resistance. Well, what we can see here on the monthly chart, those are the red lines now that are showing up on my screen out here, that the red line out here is at about 4480, 4475. That should become a very significant level of support on any pullback inside of the NASDAQ composite out here. So we've broken up above that level. This may be the consolidation range that it trades within. If you see a breakout below this level here, then that tells you that you had a false breakout inside of the NASDAQ composite. Now, we still have a weekly time frame chart out here. I can switch over and take a look at the monthly for you, so we can take a look at these automated primary trading range boundary lines on here. I'm going to go ahead and I'm going to get rid of, just to get rid of some of the clutter, I'm going to go ahead and get rid of the weekly out here. So now what we can see as we take a look at this dashed line out here, which is down at about the 2100 level, that's the largest number of co-located opens and closes that were used inside of this. And you can see here that next primary trading range came up here at about the 2890 level. You can see how price made its way up to that level, came back, made its way back. This is back in 2011, by the way. But once we saw a breakout above this 2011 area, which really took place here in November of 2012, price just simply gravitated up towards its next boundary line, its next resistance level. We actually saw during the month here of October, as price got above that level, it came back and it actually tested that area out here. But it was just that one test. So if, in fact, the NASDAQ composite, this what one would be looking for out here is how price gets handled from a monthly chart. We're only halfway through the month. This is a 4470-ish level out there. That has not been tested. right? We can see here that price has broken through that level. This is the month of August, so price has broken through it. Just as we take a look at any levels of horizontal support or resistance or diagonal support or resistance, whenever you break a channel line, in this case here, these are nothing more than horizontal channels out here, horizontal channels of support and resistance. Right now, what we are seeing that is likely unfolding on a monthly basis is a test of this area. If, in fact, we see price pull back during the month of September, during the month of October, however long that testing process could last out here, and it holds at 4470-ish area, then what this is communicating to us is the test would be over, and price would go ahead and move up to its next level in the 5200 area. Maybe right around the 48.54 level, and that's what's going on inside of the NASDAQ composite. Now, what I'm going to do here is I'm going to actually switch over to the daily chart. Let's go get some daily information and get a feel for what is going on here out here inside of the NASDAQ. Taking a look at its, at these previous levels that have been established with regard to primary trading range. We're going to take a look at these horizontal levels of support or resistance. So now we've got the daily chart. Let me go ahead and turn the monthly off so we just take a look at what's going on a daily basis out here. What we can see on a daily basis is the support levels right down here at about 44.51. Now, that is likely on any kind of significant pullback inside of the market because we have been taking a look at the NASDAQ, really been traveling in a consolidation range out here. It's really the level here on a daily basis of 44.51. That's going to become your next area for price to test. Because what we can see here, now, price has broken through this level here. It actually broke through this level back in July. On July 3rd, made a higher high, got back inside the lower part of that range out there, and flirted with this area all the way up into the trading session here of August the 15th. So 44.51 inside of the NASDAQ is really its next primary trading range boundary line. That's what's going on as we take a look at weekly, as we take a look at monthly, as we take a look at daily, weekly, monthly primary trading range numbers out there for it. If we go take a look at the S&P 500, I think I've got that out on the screen out here, and if I don't, I don't. Okay, I don't have that or somewhere. Let's go take a look at the Dow. And then the side of the Dow, let's look at the same thing out here. Let's go and let me clean up this chart a bit. We're going to change over into a monthly time frame. So give me a moment to just go ahead and turn on and off certain levels out here. Let's go take a look at what those monthly areas are. Let me go ahead and turn off the signal boxes. Let me turn off the navigator system. Let me turn off that. Let's see, I've got the volume there turned off. Okay, if we take a look at the Dow, now what the Dow has actually done, the Dow has broken above a monthly primary trading range boundary line in the 16,000 level. You're trading right now at 16,992 out here. And what's interesting here about the Dow is that it has actually tested the bottom of this 16,000 level, this primary trading range boundary line. This actually says to me that what the Dow wants to really do is move up into that 18,000 level. When we get back, we'll go pay attention to the Dow. We'll take a look at its weekly and daily PTRs out there. 877-927-6648. This is Steve Rhodes. This is TFNN. We'll be right back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow off about 2 points, S&P down 3, Composite and Russell 2000, the two that are struggling out there. So before we went to break, we were taking a look at the new tool that I've been developing with a great group of folks out here, e-signal programmers out at Traders Formula Consulting. Traders Formula Consulting out there. So if you are a e-signal user and you've been looking to create your own your own system or set of tools, or actually they've got a great set of tools out there that you might want to take a look at. That's a group at Traders Formula Consulting. So they've been working with me to develop this tool, the Steve Rhodes version of identifying these significant areas of support or resistance, and being able to do it in one click and apply it to really any chart in any time frame out here. So what I've got now is I've got the monthly chart for the Dow. And the significant, the largest congestion area of opens and closes takes place right out here at about the price level. I can tell you the exact price level is 10,466.45 if I wanted to be exact out there. So about the 10,466 level. The next area is right out there at about the 12,334. Now what's cool, as I go ahead and I blow this up on my chart out here just so you can take a look at it, we can just move up and down. What is really cool, just simply about the using this as a tool is that if you take a look at really coming off of the March lows, well, let's just pull us back to where we're at right now. Typically what you're going to see is you're going to see price bump its head just as if it's trying to picture something underneath the water, and a big sheet of ice out there, which is going to be your area of resistance and or support. In this case here, as we take a look at the monthly chart, and I blow it up on my screen out here, these are natural areas of support or resistance. Well, when the Dow out here was breaking through in December of 2013, and the Dow was trying to break above its primary trading range boundary line. It gave it up for a month, the month here of January, got back above it in February. Right now, where price is just simply stalled is the midpoint. And sometimes that midpoint level can be an area where price turns around. Sometimes it's just a stalling area. On a monthly chart, I can't tell you which it is right now, but it is logical for price to actually stall out in this area. But because we have seen a test of that primary trading range boundary level at that 16,000 area, we've seen a successful test of that. We saw the testing take place from the period of December through April out here. This actually suggests that where price wants to go to, and I'm not saying today or I'm not saying tomorrow, where price wants to go to inside of Dow is actually make its way up in that 18,000 level until we see any kind of other information out here. Well, if I'm going to go over here and I'm going to stay on the monthly chart, but just to try to keep things in perspective, I'm going to blow it up just a bit for you. And we take a look at, let me just move this down a bit. What I'm going to do is I'm going to turn on the weekly. The weekly, be a moment here to put this on, the weekly primary trading range number out here. And we say the weekly, you're going to be looking for the solid green line. So as we see any kind of a pullback out here, the very first level of support ought to be right here at about the 16,587. So I saw somebody posted something inside the den and said that probably the bears fell out of their chair because I announced a level of 18,000 out here. And I'm just reading the charts, the chart patterns out here. But if we take a look at the Dow over the last several months, what's interesting here is where price has actually found support on any kind of a pullback and any kind of a test, even last month here in the month of August. Look where it found support, right at that primary trading range boundary line inside that 16,500 level out there. So expect any kind of retracement inside of the market for the Dow to be able to find support at about 16.5. If that level fails, you're looking at about the 16,000 mark. And that is what's going on inside of the Dow. Hey, let's go down to a voice that we haven't heard for a while, one that we do want to hear from, our man Kay Rico from Pompano Beach. Otherwise, Kay Rico, how you doing, man?
Oh, I'm doing pretty good, Steve. I'm happy to talk to you.
Yeah, and I am happy to hear your voice out there. So you feeling good?
Yeah, I'm slowly recovering, getting a little stronger all the time, and, I'm grateful to be alive.
Yes. Well, we are grateful that you are alive and that you are on the mend and that you are fighting your way back to pure health. I know a lot of Tigers haven't heard your voice for a while, and so they're glad. I'm sure they're very glad to hear it.
Well, thank you. Yeah. It's really amazing how I just feel so much more clarity since I've been fixed, is my mindset says to myself that I'm getting full oxygen all the way through my body now, and I got a station break.
Yeah, we do. Stay on Kay Rico if you would, and we're going to go back out to Kay Rico out there, folks. He is a trooper. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 7. The S&P is off 1. NASDAQ Composite still the struggling dog out there, off 34 points out here. We're going to go back out to Kay Rico, Kay Rico, thanks so much for calling in. I really appreciate it. Some white light coming to you in the Tiger's Den out there. And as always, great to hear your voice.
Thank you. I just wanted to say that I just feel pure clarity that what's going on in the Middle East, in Iraq, with this terrorist barbarian group called ISIL, or ISIS, I just feel that our leadership is so lacking. I believe, Steve, that in my experience in how the leadership in the past, from World War II especially, brought people to the table, to the world, realizing that we have a terrible cancer and that we have to fight this cancer till the end. And our leadership right now, it's so lacking. It astounds me that we keep avoiding the fact that, and I would volunteer today to step on the ground to fight these animals. Yeah. And the fact is, our leadership is pussyfooting around with, well, no boots on the ground, no groundwork. This is insane leadership. I'm just sorry that this is the time we're living in with this terrible leader. Sorry for ranting.
Well, that's okay. That's okay. Let's keep it to let's do what we can to keep it to the stocks or anything that you're recovering from. So, but you called about A and V. So let's take a look at that out here for our viewers. And I know you follow the mining stocks, quite a bit. What are you doing with Allied Nevada out here? Are you in a position?
I'm watching because in June, I thought that maybe it had bottomed, but other serious matters had come up that totally distracted me from watching. And
yes.
I was pretty close on the bottom. Well, I was close, but I was right. But I think it's going to bottom more.
You think Allied Nevada is going to move lower?
Yeah, I do.
It's holding up. I would have to say that its chart pattern is holding up better than the actual metals out here. So that's one thing that I would look at. What I mean by that is, if we take a look at gold and silver, they're trading back towards their June lows out here. And specifically, if you take a look at Allied Nevada, its June low was priced out at $2.61. You're at $3.59. You're a long way away from that. So as a mining equity out here, I would have to say that this one has held up pretty strong. What it's also done here, if we take a look at its lows, here's just a couple different ways for you to maybe take a look at this, K. Rico, is off of the low from August the 4th up to the high that was put in here on August the 29th. Really all that it did was it made a 0.618 retracement. It got down to below 327, but $3.27 was its 0.618 retracement, and it did it on light volume, and you have to love that candle that it formed on September the 11th out here. Nice wide-ranging candle, and did have some accelerated volume. As far as a buyout here inside any of the mining equities, I think the safer or the better play is to wait for those to bottom. Is to wait for gold and silver to bottom out here. And I don't think that has taken place. So that being said, you probably are correct. And I would say you're correct in your assumption that maybe it hasn't bottomed. Maybe that this is not the right place to take a position in it. But it does look pretty good. It has held up pretty well. It's held up better than the metals out here. And so if you're going to look for a spot on any kind, let's just say we have a couple of days here where we just see a significant movement in gold and silver. Does this break the most recent swing point low at 332 or 322? And if it does, then you're probably taking a look at a possible entry around 292 out there. And it may be something that you need to scale into. If this isn't the only mining equity, but I know you like this one, and I imagine one of the reasons that you like it is because of the high volume bar that it has for March the 14th up at the $6.49 area, which says that says at some point in time it really ought to get up there. So it's a pretty good looking equity as I take a look at it.
Yeah, I agree with what you say. I just I'm being patient with everything right now, obviously.
Yeah.
But the GFIs, the Harmony, they've all been just slowly gaining a foothold in themselves. They're not dropping too much, but they're not going too far either.
Well, if you take a look at equities, though, and you brought up Harmony, so Harmony's a great one. Harmony way weaker of a stock than Allied Nevada. In the case of Harmony, it's actually acting just as silver is right now, or gold. And in the case of silver, which made a swing point, I think might have even been on May 28th, price right now inside of Harmony is trading below that level. So it's made 100% move, but it's not as strong of a equity as Allied Nevada is. So there are some of these mining equities that have held up really, really well out here, and I think Allied Nevada is one of them. So I'm not suggesting not for you to continue to look at Harmony. It's just that Allied Nevada seems to have the better chart pattern set up in there. And yeah, go ahead.
I was going to say GFI had a nice move off of its bottom in June also. I think it was in the bottom in June that it started to move off.
Yeah, actually, of the three that you've named, Goldfields, actually even looks stronger than Allied Nevada. Now, the difference is that Allied Nevada has got that high volume, untested high out there. So, but these two, I would have to say, Goldfields, no question about it, and Allied Nevada are two of the strong, and there's some more out there, two of the real strong-looking mining equities out there. Yeah, so I'd focus on those more so than I would Harmony when it comes to those.
Yeah, I guess it'll just all determine how gold itself handles itself.
Yeah, no. At this stage here, when we take a look at gold, it hasn't found its. I believe. So I took a look at the CFTC data over the weekend. Now, the CFTC data, the Commitment of Traders data, as gold was up at its recent highs, what was so interesting about that data was it was showing the large commercials. Those are the big money traders that they had taken, very, very high net short interest positions as it related to open interest out there, and what they have done over the course of the last 2 weeks is they have come well off of those positions. Not far enough yet to necessarily call a bottom, but they are moving out of those positions in a quick manner. And I think when they actually are able to set up a low, I think what we see here is we see a significant low in the metals out here. And I don't know whether it's going to gold or silver are going to make, or gold is going to make its 100% or its 1-to-1 A to B equals CD to the downside. I just know that we ought to really keep an eye for some reversal signals out there, whether it's candlesticks, some sign of strength out there. And what we do want to do, what you and I and everybody else, all the other Tigers want to do, is we want to try to catch that move early on, because that's when the biggest gains will come. So I actually like the fact that more people are bearish on gold because I really think that there is a turn that's coming.
Well, like you said, keep an eye.
Yeah. We'll keep both of them on there. So, Kay Rico, we wish you the best in your recovery out there. You're a trooper, and we are grateful that you are such a tiger, out there for us. And we appreciate it very much, and everybody is sending you all the strength that they can. So all the great white light from all the Tigers and Tigresses here at TFNN.
Well, thank you, and good health to everybody. And I have a more warrior spirit than I've ever had.
That's a good thing. Stay in touch with us, would you?
I will. Thank you.
Absolutely. That was Kay Rico, and he's down in Pompano Beach recovering, and a trooper out there for sure. So we took a look at, and it was a great call because, we were able to take a look at some mining stocks out there, and you could see, some of them, two of them that we looked at that were, very, very strong looking compared to what we have seen that's actually taken place inside this most recent pullback inside of the market out here. If we take a look at some other things that are moving, so it's really just the NASDAQ stocks that are just getting pummeled today. Let's take a look at Chipotle, and I think somebody in the den might have asked me to take a look at something as well. I'll try and see if I can figure out what that is, or maybe actually if somebody asked me in the den to look for something, if you could type that in again, that would be great, since that window that I've got is somewhat minimized at the moment. But I did want to take a look at Chipotle, and let's go see what we've got going on inside of Chipotle here. And the monthly chart shows we had a little monthly doji last month out here, and we see some leaves that are falling off the trees. But I want to take a look at the daily chart as we speak right now inside of Chipotle. And Chipotle right now pulling back into this wide price spread accelerated volume area. It has a gap up. That's going to be its first level of support to be tested. That's at a price level of 649.27. Now, the volume on that breakout session was very large for this equity. That was a volume of 2.2 million shares. Friday, this thing pulled back with 300,000 shares. Today, so far, 153,000. So we can see a little bit of an acceleration of volume compared to Friday. If 649.27 fails, what we're looking at then is really the top of the gap, meaning the trading session from July 21st. If we take a look at that price point area, fairly wide price spread, as I say, 596.90, excuse me, is going to be that level. So inside of Chipotle, one of the more bullish things that you could see out here is you can see Chipotle come back into that breakout area, test that 596.90, do it on lighter volume out there, and then maybe that could be a target. Now, what you also got inside of Chipotle, just to give you a bit of a range out here, this thing had a very wide-ranging bar. It had moved higher and then lower during the day of April the 17th. And that is your actually larger volume area, which is 3.8 million shares out there. So the very likely area where Chipotle ought to find support if it can get inside the gap. I can't guarantee whether we'll get inside the gap or not out here. 649.27 is in that 596 to 588 type range, and that is on Chipotle CMG. Had a request to go take a look at PASS, although I don't recall that as being the equity that was requested in the den. But let's go take a look at the Pan American Silver out there for our man Danny inside of the Tigers Den. Now, if we take a look at Pan American Silver and we take a look and just simply compare mining equities out here, Pan American Silver is a weaker stock than Goldfields, as K. Rico pointed out to us, or Allied Nevada. Now, that doesn't mean that this is not a good-looking, not a valid buyout here, but let's take a look at what Pan American Silver is doing. Now, in the case of silver, we know that silver's trading back into, or actually below, its May 30th, or May 30th swing point, I believe, is the date. Inside of Pan American Silver, just to get an idea for how this trades with silver, well, PASS has a swing point low from May 29th out there, and that is really where it looks like it is traveling back to. The top of that is 12.54. You're trading at 12.68 right now. Volume on that trading session happens to be 1 million shares. The next day, 800,000 shares. So no real significant volume around there. 1.6 million shares on May 28th out there. Volume on Friday happened to be 1.2 million shares. So far today, 236,000 shares in a little over an hour of trading out there. And so you've got about 1 million shares or so, it looks like, trading hands today. And this morning, as well as on Friday, broke through a market profile low. So that itself says more bullish or more bearish than bullish, and suggests that Pan American Silver probably comes back and tests that swing point. Whether it's the low or the high, that I can't tell you. 12.54 to 12.02, and it could break below that. This will trade with silver. This is why it's important to be focused on what is silver doing as it deals with its swing point out there. So the first level of support I would be looking for inside of PASS, PAAS out there, that is going to be at about the 12.02 range. You're trading at 12.67 as we speak right now. As I take a look at this equity, and I look for, I'm going to put it on a weekly basis, any kind of high volume highs out here, see if we see anything out there. And the answer is no, I don't. I don't at all. In fact, on a weekly basis, just to give some additional logic as to why this might pull back to 1224, it would just simply be its old market profile low, right in that 1224-ish type range, 1205 actually, the low from June 2nd, 2014. And it does look like that is where Pan American Silver would like to trade back to. So you got Tesla moving down, Priceline moving down. Let's go take a look at Priceline, PCLN. Let's go see what it is doing. In fact, I've got the weekly chart up on my screen out here. So the weekly chart says 1125.16 is likely to be a level of support that we should be able to see inside of a Priceline. Let's take a look at the weekly time frame. Let's see what the daily has to show us. We'll take a look at the daily. We get back from this breakout here. We have seen Priceline break some swing points. We'll go see if they broke it, if it broke it, with any kind of volume down here. Yeah, Priceline headed to this high volume low that's untested. That's from May 8th. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off about 2, S&P down 4, Composite down 43 points. The Composite, the Russell 2000, the struggling dogs in the house out here. We were talking about Priceline, or I brought up Priceline before the break. It did break a swing point with volume. That swing point out here was from July 17th. That had 933,000 shares. Priceline had gapped down with volume, 1.7 million shares on September 5th. Now, what Priceline is doing right now, it's trading out at 1147. It's trading right into this high volume low that has not been tested. The top of that is at 1152.98. The bottom is at 1087.26, and that is where Priceline is going to should go ahead and move down to. Now, it is doing it with some light volume. So far today, volume at 238,000 shares out there. So it's actually, it would look like, appears to me, volume is accelerating over Friday's move, and Friday's move was a slight acceleration over Thursday's move. Nonetheless, 1087.26 is very likely where Priceline is headed to, and it may find some pretty decent support there. If it breaks that level, and it's able to do it with volume, which is more than 2.6 million shares out there, it'll set up an A to B equals CD to the downside. Now, I had a request. Inside was able to go back to the archive of the Tiger's Den out there, and there was a request for me to go take a look at, which we're going to, Golar LNG out there. GLNG is the ticker symbol. Now, I was able to go ahead and apply the primary trading range tool to it. We're looking at the daily chart. Those are the blue lines going across my screen. The solid lines are the significant areas of support and resistance out here. Once you crack through a resistance level, price ought to go ahead and gravitate up to the next level of resistance. Inside the case of Golar, that says $73.68. If we take a look at the daily chart out here, as price got up to the top of its primary trading range boundary line, which comes in about the 66 level, 66.09 to be exact, we saw price get up there on August the 20th, did it with the volume of 898,000 shares, tried to crack it back on August 26th with 2.4 million shares, was unable to crack through it both on August 26th and 27th. Price came where? All the way back down to the bottom of its support level, that 58.51. However, it was able to crack that level on September 12th. It did it with 3.7 million shares. It was taking out its swing point, its previous swing point, that had 2.4 million shares. All of that is a setup for Golar LNG. GLNG is the ticker symbol to go move up to the 73.68 level. All right, so let's go ahead and sum things up for you. If we take a look at the New York, well, this is actually the NASDAQ Composite. So the NASDAQ Composite, in one sense, it has completed its 165-point consolidation breakout move. That was a price projection of 46.50. What we actually saw take place inside of the composite was a move up to the high, which was at, I got it turned off. It looks like about 46.10 or so. So about 40 points away from that. It has broken through a consolidation pattern. We have not seen a test of that level. We will likely see a test of this level the way that the composite is trading. 44.85 is that area. We saw price moving higher. We saw a declining price oscillator inside of the NASDAQ. The last time we saw that, well, that was back as it was forming highs back here in July 3rd to be specific. So we'll see if that area holds. If 44.85 fails, what we're likely to see inside of the composite is at least some type of retracement from low to high out here, and the 0.618 area would be what I would be targeting. That is 44.33. Well, folks, it is Marvelous Monday. That means stay tuned because our man Basil Chapman is up next. After Basil, we've got Larry Pesavento, Daryl Martin, David White, and the Tom O'Brien Show from 3 to 5. Thanks so much for being with us, folks. Have a marvelous and magical Monday. I look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.